Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehisha. With me is Ashesha Advaryu. And in this show, for the next 1 hour, we'll be taking you through all the big buzzers in today's trade, tell you why these stocks are in focus. We'll be doing all of this in under a minute each. And we'll also be bringing on board our technical experts to give you a better sense of some of these stocks on the charts as well. But before we kickstart the show, Ashesha, merits to take a look at the market because we had seen a little bit of a recovery, but we're once again very close to the day's lowest point now.
Well, absolutely. And it's turning out to be a volatile day for Indian markets. As you mentioned, we did touch 25,000 briefly, but after that we've fallen yet again, and Nifty now sitting near that 24,800 odd level. Nifty Bank meanwhile is also down 200 points near that 55,400 odd mark, in fact below 55,400 mark, and several sectoral indices continue to bleed in today's trading session. In fact, we have IT index which is sitting with a cut of nearly 1%, and a whole host of banking and financial services stocks are also under pressure today.
Okay, so that's the way the market is panning out right now. A little bit of a recovery is what we had seen, but we've slipped once again from the day's highest point, and deep shade of red coming in across the board. But let's bring on board our guest who's joining us on the show on the technicals. We have Osho Krishnan, Chief Manager, Technical and Derivative Research at Angel One, and from our in-house research team today we have Rabinder as well as Kanishka joining us. Good afternoon to all of you, and let's kickstart the show. But Osho, before I come to you, I want to throw some light on the entire defense space that's up in a buzz amid a largely sideways market today. Names like Bharat Dynamics, HAL, all of these stocks are in focus in today's trading session. This is on the back of a tweet that came in by the Defense Ministry that said that in a significant push towards enhancing India's indigenous defense capabilities, they have said that the Indian government, especially the Ministry of Defense, has come out with a new indigenous defense capability program for fostering robust domestic aerospace industrial ecosystem. And on the back of this, Defense Minister Rajnath Singh today has approved the Advanced Medium Combat Aircraft, which is the AMCA program execution model. Now, the Aeronautical Development Agency, which is the ADA, is set to execute this program through industry partnership. This is an important step, harnessing the indigenous expertise, capability and capacity to further develop the AMCA prototype, which will be a major milestone towards Atmanirbharta for Bharat in the aerospace sector. And this is going to be done in collaboration with industry players. And on the back of this news flow, you have players like BDL, HAL. Lastly, the aeronautical players, they are up and away. BDL up almost 2.4% as we speak. HAL also inching towards a 1% gain right now.
Several stocks in focus on the back of this news flow, but Bharat Forge, that's the stock, Osho, you've picked up for us. 1252, that's where the stock is currently trading. Tell us, what do charts indicate for Bharat Forge?
Very good afternoon to both of you. Well, looking at the technical developments of Bharat Forge, then this counter have seen some kind of positive traction in the recent period, and it is into a very strong consolidation from the past 6 to 7 trading session. Also on the technical development, there has been a positive crossover of the 20-day and 100-day exponential moving average. So all the technical legalities looks very positive for the counter, and I'm expecting that in the coming period there is a high potential for the counter to have a very strong surge towards the zone of 1350 to 1360. So one should definitely keep radar on this counter. Any breakthrough above the zone of 1255 to 1260 can give approximately 60 to 70 points of immediate rally in this counter.
As far as Bharat Forge is concerned, but Aditya Birla Fashion and Retail, this stock is also on our radar this afternoon after it reported its numbers yesterday, and we have a whole host of brokerage reports. The stock in fact is holding up in an otherwise weak market, 1.5% higher. Antique has maintained its whole stance on the stock with a target price of 86 rupees per share. They say demerged performance was healthy, in line with what the street was working with. Profitability has grown across segments, and they say that company's profitability is likely to improve going forward, driven by premiumization strategy in pantaloons and scaling up of their ethnic wear segment. In fact, Antique is also expecting revenue and EBITDA growth of 17 to 22% respectively for the next 3 years, and they believe in short-term revenue and earnings performance will be muted on account of challenging environment, but the long-term outlook continues to remain very positive. Nuvama meanwhile has downgraded the stock, and they've maintained their target price of 84 rupees per share. So the stock in focus on the back of these brokerage reports after their results.
Okay, so that's the take on ABFRL. Stock holding up pretty well right now. And we also caught up with Jignanshu Gore when the demerger of Aditya Birla Fashion had happened and the spin-off happened into ABLBL. And will Aditya Birla Fashion and Lifestyle business be able to turn their business around post the demerger? We earlier caught up with Bernstein's Jignanshu Gore because he believes that there are challenges galore, but one of the ways could be to expand the distribution network. Let's go across and listen in.
The thesis behind creating two different entities was because they are companies which have two different objectives and they need two different strategies and hence possibly two different sets of investors who would be interested in investing there. We think that strategy is not necessarily playing out by itself, but the individual companies will need to demonstrate growth in order for re-rating. And we thought that the price is not depressed only because of different ownership, but it's also because fundamentally they have not performed as much as some of the peers in the industry have. So our expectation is the corporate value creation for shareholders will not be automatic just because of the demerger and corporate action. It will have to follow performance improvement in their individual companies, which we watch very closely as over the next few quarters. One potential way is adding distribution network because their presence is can be sort of extended beyond where they are. But again, structurally, I think it's going to be challenging for them to bring back growth for a very long duration.
That's the view coming in on Aditya Birla Fashion and Retail. But Schneider Electric, this stock is also in focus on the back of its results. Rabinder, tell us, how are the results and how is the stock reacting?
Well, Schneider Electric is focused on back of good result. The company reported its highest ever revenue and profit since inspection in FY25. Company reported revenue at rupees 587 crore, which was up by more than 24% year-on-year basis. And if we talk about PAT, then company reported PAT at rupees 55 crore as compared to 3 crore year-on-year basis. And if we talk about EBITDA, then company's EBITDA saw an uptick of more than 18% year-on-year basis at rupees 87 crore. And company say that the order backlog as of 31st March 2025 stand at INR 1253 crore, and the company higher Q4 sales are driven by the execution of a few large orders in Q4. So on back of strong Q4 earnings, stock is up more than 4.5%.
It's a good set of numbers coming in from Schneider Electric. The stock is doing very well amid a market that's largely consolidating. But Osho, coming to you, CAMS is the stock that you've picked out for us. Now, on the charts in the last 6 months, it's been an 18% cut coming in on CAMS. No sign of recovery coming in at all, despite, other than that, last 5 days, very minor uptake, but not much happening. Give us a sense of what you are spotting on the charts when it comes to CAMS.
See, overall, in the last 3 months, there has been some kind of positive traction in this counter. The counter have seen some kind of positive developments from the zone of nearly 3000, and from there onwards, it has been forming a higher lows kind of a pattern on the daily time frame chart. So as of now, yes, the counter is into a consolidation zone, but it is also into a formation of making higher lows on the daily development. So I'm expecting that any movement beyond the zone of nearly 4000, 4080 kind of a zone on the spot levels can give a very strong boost to the counter towards the zone of nearly 4400 as immediate target. So on the lower end, 3800 is the support zone. On the higher end, approximately 4100 on the rounder figure, that is the resistance for the counter. Once it breaches the zone of 4100, then from there onwards, we can see nearly 300 to 350 point of rally in the short-term period. So one should definitely keep radar on this counter also, and even can accumulate at current levels for a decent gain in the short-term period.
Accumulation strategy, that's the word coming in on CAMS. The stock is holding up, and another stock that's holding up in an otherwise weak market is Nazara Technologies. After it reported very strong set of numbers, the stock is up nearly 3%. Kanishka, tell us, how are the results? And the stock is up 3% today.
That's right. It was a stellar quarter, in terms of Q4 for the company. Nazara Tech did have a very strong result when it comes to year-on-year comparison. It reported a 90% year-on-year growth in consolidated net profit to 16 crore rupees. This compares to 8 crore rupees in the year ago period. Now, the gaming company's revenue from operations that surged 95% year on year to 520 crore rupees. Now, the profit after tax that was still down about 40% on a sequential basis versus 26 crore reported in the third quarter of FY25, while the revenue too fell nearly 3% sequentially. That's on a sequential basis. Apart from that, Nazara Tech reported its highest ever annual EBITDA of 153 crore rupees in FY25. This comes alongside revenues of 1,624 crore rupees for the year, with its core gaming business delivering a healthy 20% EBITDA margin and an overall EBITDA margin of 9.4%. Now, following this really strong quarterly performance, as you said, the stock is up nearly 3% in trade today. In fact, if you look at the month, the trend in the past month, it's seen a solid uptick of 30% in the month gone by.
Okay, so that's the take on Nazara Tech. Strong set of numbers. Stock doing pretty well today. But viewers, on that note, we'll slip into a very short break. Just trying to draw your attention to the numbers on the bottom of the screen. The net profit has halved for TTK Prestige. On the back of that, the stock is slipping as we speak. We'll bring you more on that on the other side, and we'll be right back. Hi there, welcome back to Market Fatafat. Let's keep it going with all the buzzers in today's trade, and let's talk about another earnings candidate. That's GICRE, General Insurance Corp, and that company has reported a 17% decline in its net profit to 2,183 crores for the quarter gone by, down from 2,642 crores on a year-on-year basis. The reinsurer's profitability was impacted this time by weaker underwriting performance, even as premium collections rose. Now, GICRE's combined ratio that rose sharply to 103.5% in quarter 4 compared to 89.26% on a year-on-year basis, indicating a deterioration in the underwriting efficiency. The company booked an underwriting loss this time around of 392 crores compared to an underwriting profit of 570 crores this time last year. So big hit coming in on that front. The gross premium income rose to 10,367 crores from 8,724 crores year-on-year. And on the premium front, GICRE recorded an 18.8% increase in domestic premium, while international premium declined by 7.8%. So more cons than pros when it comes to GICRE's quarter for earnings. And on the back of that, the stock is low by almost 3.5% as we speak.
But Exide Industries, that's also on our radar this afternoon. Osho, tell us, what do charts indicate for Exide Industries?
For Exide Industry, this counter is into a formation of again a higher lows kind of a pattern on the daily time frame chart. And in the recent period, in the past 6 to 7 trading session, there has been a very strong consolidation at the 89-day exponential moving average. So looking at the overall traction that it has been gaining in the past 1 to 2 months, I'm expecting that any breakthrough above the zone of 395 and 400 can give a very strong boost to the counter. And the next potential target that is being seen on the technical charts on a very short-term perspective is nearly 430 and 435 kind of a zone. So one should definitely try to accumulate this counter once it surpasses the zone of 395 for targets of approximately 430 to 35.
430 to 35, those are the kind of levels that we could see on the charts for Exide Industries. But Ashoka Buildcon, let's also talk about this stock. It reported its numbers, and we have a whole host of brokerage reports that have started flowing in. The stock, of course, is under pressure because it reported weak set of numbers. Revenue was weak, 21% decline in revenue is what the company reported, 40% drop in profitability. And Antique, meanwhile, has maintained its whole stance, but they've cut their target price to 244 rupees per share for Ashoka Buildcon. They say the improved order book visibility is a positive, but most projects are still in early execution phase, and revenue growth is expected to pick up only from the second half of FY26, and that is the reason they are not very bullish. In fact, they've gone ahead and reduced their EPS estimates for FY26 and 27 by 8 and 5% respectively. We also have Nuvama, who has maintained its reduced stance. They've lowered their target price to 203 rupees per share. They say order book has improved, but focus on asset monetization continues to remain intact, but execution of projects is on the slower side. So on the back of these brokerage reports that have come in, Ashoka Buildcon, after reporting weak set of numbers, is sitting with a cut today.
Okay, so Ashoka Buildcon mimicking the market right now in the red, but let's move on. And Rabinder, Varun Beverages is the stock that you've picked out for us. We also have a brokerage initiation coming in and a news flow that's backing this stock. Tell us what it is.
Well, there is two news flows coming in. One is brokerage note and another one is update on the acquisition, where Goldman Sachs have come out with a note on Varun Beverages and they have initiated a coverage with buy rating with target price of rupees 600. They say that the company is using strong execution to tap into a big growth opportunity, and company has many factors that can help it to do better than others in India's fast growing steady to drink beverages market. And since India's per person RTD drink consumption is among the lowest in the world, there's a lot of room to grow for the company, and Varun Beverages earning is expected to grow faster than industry, making it a good investment with balanced risk reward. And company has completed acquisition of 50% equity share capital of Average Industrial Lanka Private Limited. So back of all this news flow, stock has recovered 1.5% from day's low to trade in green.
Bridges, that's the stock we are talking about. It has recovered 1.5% from the lowest point. But Engineers India, Osho, the stock is trading at about 202 odd levels. What do charts suggest for this stock?
See, Engineers India has seen a very strong recovery from the zone of nearly 145 and now is hovering above the zone of 200, which is the psychological mark, and also the 200-day simple moving average, which was approximately hovering around the zone of 190. So overall, there has been very positive development in the counter. The only crucial thing that we need to watch is the zone of 208 to 210, because this was the zone from where we have seen correction in this counter from the month of December 24, and from there onwards there has been a very strong rounding bottom formation in the counter. So any breakout above the zone of 208 can give a very strong boost to the counter, and on the higher end, near about 40 to 50 points of higher movement can be expected from medium-term time frame. So one should definitely try to accumulate this counter once it surpasses the zone of 208 for approximately target of nearly 260 from short to medium-term time.
Okay, so that's the take on Engineers India, and that's Osho's target levels to watch out for. But Kanishka, coming to you, Interglobe Aviation, the stock that everybody has been talking about, give us a sense of what's been happening, what's the latest on this stock?
Well, absolutely, it's been in focus all day. Now this comes as many as 22.3 million shares of Interglobe Aviation, that's the parent company of Indigo. They've changed hands in two block deals today. This amounts to 5.8% of the company's equity. The block deal is also reportedly worth about $1.36 billion as per the term sheet. Now, however, there are no comments from Indigo yet on the matter. Goldman Sachs, Morgan Stanley and JP Morgan are said to have led the share sale. This comes at a time when Gangwal has been continuing to reduce his stake in the company, that is the operator Interglobe Aviation. As of March 31st, if you look at the shareholding pattern, the Gangwal family held about 13.5% stake in Indigo. That's down from 37% about 3 years ago. Now, this latest sale that has happened, the latest stake sale that has happened today, represents the fourth step since 2023 in their phased exit from the airline, which Rakesh Gangwal did co-found with Rahul Bhatia in 2006. Now, after the block deals that happened today, the stock has been trading lower. It's been under pressure and is down about 2%.
Okay, so the stock is under pressure, down 2% after that block deal that took place. But Oberoi Realty, the stock is holding up with some amount of gain. 1748 is where the stock is currently trading. Osho, what is your view on this stock?
See, this counter has set up a triple bottom kind of a formation on the daily time frame chart, and overall the real estate space is looking very lucrative as of now. So having a technical breakout in this counter, I'm expecting a decent rally in the short term period. On the higher end, near about 1850 to 1900 is the immediate resistance zone for the counter, and any breakthrough above the zone of 1900 on a closing basis can provide a very strong trend reversal for a medium term perspective. So one should definitely try to accumulate this counter at current levels for immediate target of nearly 1850 to 1900, and once it surpasses the zone of 1900, then we can see higher targets of nearly 2050 from short to medium term perspective.
So accumulate and bullish call coming in from Osho and Oberoi Realty. Let's move on from there and shift our focus to the pharma pack. Shilpa Medicare in focus on the back of its earnings. It's been a largely mixed quarter coming in from Shilpa Medicare for quarter 4. Stock is taking a little bit of a hit today, down 2.2%. If you take a look at the numbers on the consolidated year-on-year basis, revenue has come in at 331 crore rupees compared to 292 crores, which is up almost 13.5% year-on-year. But what's taken a hit this time around is the net profit, because that's coming at 50 15 crores compared to 25 crores, which is down 40.8% on a year-on-year basis on the back of an exceptional loss of 28 odd crore rupees that the company has incurred in Q4. EBITDA has come in at 77 crore rupees compared to 70 crores, so that's up 9.4% year-on-year. But once again, EBITDA margins have also shrunk a little bit at 23.2% compared to 24%, down 85 bips on a year-on-year basis. The board has agreed to pay a dividend of 1 rupee per share. So that's a roundup on Shilpa Medicare's Q4 numbers. A mixed set of numbers coming in, wherein revenue and EBITDA have gone up, but profitability and EBITDA margins have taken a hit. And remember, there was an exceptional loss of 28 crores this time. So on the back of that, stock under pressure, 2.2% lower.
Absolutely. So news flow coming in, the stock under pressure, 2% lower as we speak. But let's also talk about Dabur, because company has approved the amalgamation of Sesa Care Private Limited with and into the company and their respective shareholders and creditors. And in fact, we also have Motilal Oswal report that has come in on this particular news flow, where they say that the proposed amalgamation presents a strategic opportunity for Dabur to bring a premium brand with strong credentials around Ayurveda to its product portfolio, which is a key white space in its current hair oil portfolio. In fact, Motilal Oswal also says that it intends to improve the growth prospects of the combined entity in the hair oil segment, which is expected to benefit from Dabur's expertise and experience and extensive distribution network that the company is holding on to. So on the back of this news flow that came in, the stock is holding up in an otherwise weak market, up 0.5%.
Okay, so that's the take on Dabur India and amalgamation with Sesa that's come through. So on the back of that, the stock is doing okay. But on that note, we'll slip into a very short break on this edition of Market Fatafat and be right back on the other side with more stocks.
If you like this video, then like, share and subscribe to ET Now.